The Internal Revenue Service provides stringent guidelines for taxpayers seeking to claim travel-related expenses as deductions on their tax returns. According to the Internal Revenue Manual, one must keep adequate records to substantiate the costs. For example, if you're flying for a business meeting, you should keep boarding passes, airline receipts, and hotel invoices. For meals, keep the restaurant receipts, and make a note of who attended and the business purpose discussed. In addition to standard expenses, a comprehensive diary or log should be maintained. This diary should capture the date, time, place, business purpose, and amount for each expense incurred. For instance, if you drive to a client's office, you should record the odometer reading at the start and the end of a trip. The date, the business reason for the visit, and the destination. The IRS recommends using apps or mileage logs to track this information accurately. Maintaining separate accounts for personal and business expense is highly advisable to simplify record keeping. For example, using a dedicated credit card for all business-related travel can make it easier to track and substantiate your claims. Vehicle-related deductions require special attention. If you use your car for both personal and business purposes, log the mileage for each to distinguish between the two. For example, if your odometer reads 10,000 miles at the start of the year and 15,000 at the end, and you have logged 2,000 miles for business trips, you can claim a deduction based on the business miles. All of these records should be preserved for a minimum of 3 years from the date the corresponding tax return was filed. It's crucial to consult the most current IRS guidelines and give us a call for further updated information. Distinguishing between business and personal travel is essential for accurate tax reporting. According to the IRS, travel is considered business-related if its primary purpose is for business activities, such as meeting clients, attending conferences, or other work-related tasks. Business travel, on the other hand, is primarily for leisure or non-business activities. It's important to note that mixing business and personal activities during a trip can complicate your tax deductions. For example, if you extend a business trip for personal, sightseeing, or vacation, only expenses directly related to the business activities can be deducted. In such cases, you should prudently separate and document the business and personal components of the trip. For instance, if you stay an extra 2 days at a hotel for sightseeing after a business conference, the lodging and meal expenses for those additional days would be considered personal, not deductible. Keeping a detailed itinerary can help clarify the nature of each activity and expenses during mixed-purpose travel. This should help clarify the difference between business and non-business travel. You can be assured that if audited, a large travel expense will be one item that will be picked up as an audit item.